In today's video, I'm talking to move up buyers. Have you outgrown your home? Do you need something bigger? Do you need a new neighborhood? In 2023 and 2024, I'm hearing a lot of people say, I don't know if it's a good time for me to move up. Unfortunately, you can't always time when you're going to move. It might be out of necessity. Stay tuned. I'm going to talk through the proper way to be a move up buyer. Stay tuned. All right, Matt Gouget, Matt the Mortgage Guy, powered by You Mortgaged, licensed in 48 states. Connect with me and my team by going to greatmortgagebroker.com. We'll talk through your specific scenario. In this video, I want to talk to move up buyers specifically because I'm having a lot of these conversations. And more often than not, when somebody who's not in this scenario thinks about a move up buyer or talks about the current interest rate environment, they're like, it doesn't make sense because mathematically numbers are this and numbers are that. Unfortunately, that's not how it works, right? I talk to buyers that have a real need, right? They need to be in a different school district. They just had twins. They went from a family of 3 to a family of 5. They need a bigger house, right? And so there's no timing a move based on when the numbers make the most sense. It's just like, hey, we've got equity in this current house. We want to take that equity. We want to put it towards the purchase of a new house. And it's a move that we are going to make. We have to make. And whether we make it now, in a year or 3 years, it's something that we're doing. So let's figure out the best way to structure it. So in this video, I'm going to show you real life numbers. I'm going to talk through some scenarios that I've seen, but know that everybody's scenario is going to be different, right? You're going to have more or less equity to put down. You're going to have debts that you want to pay off separate from the mortgage, and you're going to put only 70% of your proceeds from the sale down. Others might put 100% of what they net on the house down. Others might put some money in the bank for an emergency fund. That is totally up to you. And the good part about it is you work with a great financial mortgage advisor. And I say financial mortgage advisor because we're the debt advisors, right? You got financial advisors that are advising you on your assets and how to use those and leverage those to grow and support you for your whole life. As a debt advisor, as a true mortgage advisor, we're going to look at the whole picture. We're going to look at the future and the plans. We're going to help you structure it accordingly, right? So let me show this example because this is one that I'm seeing quite a bit of. And so I just want to throw some numbers out there so people can see, right? If you're looking at buying a bigger house in a nicer neighborhood, sure, your mortgage payment is going up. But maybe when given all the context, we just had twins. We went from a family of 3 to a family of 5. The wife just got a new job promotion, and she's making $60,000 more per year than she was in her prior position. And, the husband's got a new job where he's making 20% more as well. So, we can afford more and we want more, and we quite honestly need more because the family's growing. So I made the mistake of, in some circumstances, going, well, I don't think they want to go from a $1,700 payment to a $4,200 payment. That was an assumption. The truth was they could afford it, and it's something that they needed for their family and for their lifestyle. So without further ado, let me share my screen. A scenario where a client is going to sell a home that they bought 8 or 9 years ago. It's appreciated a ton. Net proceeds from this sale, they are going to net about $300,000. Now, the goal is to put as much of that as possible towards the purchase of the new home, the bigger home, the nicer home in the nicer neighborhood. That's going to be about $750,000 purchase. Well, this is what we've put together. And if you haven't heard what a 2-1 buy down is, a temporary buy down is, that's what this structure is. I've got at least 3 or 4 other videos on buy downs. You can check those out on the channel. But here's what we've got structured, where down payment closing costs all in. About $275,000 is going to go towards this mortgage. There's $25,000 that's going to be put in the bank, or if there's repairs or something that goes on with the sale and the numbers that we're projecting are less, we've still got some wiggle room here, right? So this $750,000 purchase with 35% down, instead of just going straight into a 7.399% rate, great agent is going to go out there and realize that the move up market has sellers that are motivated, and there's not a lot of people lining up to buy homes at 7+% interest rates. They're going to negotiate a $15,000 seller credit. So over here, we've got that $15,000 seller credit baked into this scenario. $11,566 of that goes towards the 2-1 buy down. $34,34 remaining comes off of the total cash to close. It offsets closing costs. So rather than go straight into $42.75 a month, which in fairness is going to be a step up from the current mortgage, they're going to start with this year one based on a 5.399% interest rate, all in payment, principal, interest, taxes, insurance, $36.37 a month. Year two, $39.49 a month. And then year 3 through 30, $42.75. I've mentioned this on previous videos. If rates come down, and just for hypothetical purposes, we get halfway through 2025 and rates are at 5.99%, you do a refinance, whatever's left in this escrow account that's used for the buy down. You know, it's a monthly subsidy that's saving them roughly $600 a month in year one, roughly $300 a month in year two. If there's anything left in there, it's going to go towards principal pay down. But maybe they get an opportunity to go 5.999 with a refinance. Then they're locked into a 30-year fixed about $3,800 a month, and they're in their new home that they love. They're quite honestly in a market right now getting credits and buying a home that when rates do go to 5.99% might cost $850,000, $900,000, because when rates come down, buyers are coming back. That's a foregone conclusion. So there's going to be a certain segment, there's going to be a certain demographic that a move up purchase does make sense. There's endless scenarios, and I can't show them all here, but when you're thinking about doing it, even before you've listed house for sale, even before you've done any of that, feel free to connect with us. Let's have a conversation. Let's look at how much are you going to net? And then we've got that number, in this case, about $300,000. Is there debts that might need to be paid off, want to be paid off? In some people's cases, they might have $1,100, $1,200, $1,300 payment for a $60,000 debt, which when you factor that in and realize, sure, my mortgage is going from $1,800 to $4,000, but I'm knocking off this debt, I'm knocking off that debt, and my outflow per month is going to be exactly the same. And maybe I'll even put some reserve funds in the bank. Quote unquote trapped because of a low interest rate in their current house. There's plenty of them that are going to be freed out of necessity because they need to buy something. And with all that equity, it gives them options. Some of it goes towards the purchase of the new home. Some pays off some existing debt. Some goes into a savings account, an emergency fund, what have you. If you want to have that conversation with us, go to greatmortgagebroker.com. We're happy to take a look. We're happy to talk about what that's going to look like. Second step would be connect with an agent, one who's done something like this before, who can talk to you about whether it's going to be a contingent sale and you're offering on the place you want, contingent on your house selling, and then that one goes to market, whether you put your house for sale on the market first, get it into contract, and then go out and submit offers to say, look, we're in contract. It's going to close in 17 days. That can also be done a number of different ways. You have to have a great agent, a great lender giving you great advice, and you can make it happen. Thanks for watching. Again, greatmortgagebroker.com. We'd love to talk to you. Talk to you soon. Bye-bye.